Several people, including myself, disregarded the teachings of ICT because they felt so complicated, had several moving parts, had tons of terms which you had to master, and they were just overwhelming, for example, for a beginner. But don't worry, because in this video, I'm about to break down a particular concept of ICT, which is the concept of the fair value gap, which he taught in the ICT 2022 mentorship, which I was able to use to pass the My Forex Fund evaluation phase 1. If that sounds interesting, then let's get right into the video. Looking at the top left part of the screen right now, this is the simplified checklist which we are going to be using to trade this strategy. So the first thing on the checklist is draw a vertical line at 8:30 and 11 New York Standard Time on the 15-minute time frame. So you start on the 15-minute time frame where you draw these vertical lines, and these vertical lines demarcate the zone within which we are going to be trading. So we are going to be placing our trades only within this period of time and not out of it. Then we go to the next step, which is drawing a horizontal line on a swing high and low nearest to price on the 15-minute time frame. So this is, for example, a swing high, and this is, for example, a swing low. On the 15-minute time frame, after demarcating your range which we're going to be trading, we just look to the left for any recent swing high and any recent swing low. I will show that more when we get into the charts to start looking for this trading setup. Then the third step we do is when the high or low is broken, we drop down to the 1 minute, 3 minute, 5 minute time frame to look for a trading setup. So after doing all of that, we drop down now to the 1 minute time frame. After the swing high which we had drawn was taken out, or the swing low which we had drawn was taken out, then we drop down to the lower time frames to look for a trading setup. So now what is this trading setup we are looking for? And that is where step 4 comes in. So we wait for an impulsive move. So that's the first thing that happens. When we get an impulsive move, we start looking for the characteristics of this impulsive move that is going to warrant us to take a trade. And what is the first characteristic? That is an impulsive move in the first place. Then that impulsive move should take out a swing high or a low and form a fair value gap. So for example, this here, it's an impulsive move that I'll be looking for. So has this impulsive move taken out either a swing high or a swing low and formed a fair value gap? Yes, it has. This impulsive move has taken out this swing high right here. And as you can see, this impulsive move has formed this fair value gap right here, which I've just drawn. And also it actually formed two fair value gaps. You can see this is the second fair value gap which that impulsive move formed. This first characteristic which we want to see in our trading setup has actually been formed. Then the next characteristic, has it formed at least two opposite candles before this move? Yes, it has. Since this is a bullish impulsive move, it has formed at least two bearish candles before the impulsive move. So that second characteristic has been met. Then, has the displacement of this move, is it greater than 25 points? Yes, it is. So let's check it out. So the displacement, to measure it, we measure the candles that are within the fair value gap. So the candles that form the fair value gap themselves, just the bodies of those candles. We want those bodies to be greater than 25 points. And if we look here, the displacement is actually 26 points. So it's greater than 25 points. So with that, all the rules which we want to be met on this trading setup has been met. And also we want that candle 3 of this fair value gap should be bullish, since it's a bullish setup, and that has also been met. So with that, we go now to the next step, which is step 5. We draw out the fair value gap formed and wait for price to return. We have drawn out the fair value gap, and let's just say we were on this particular candle. We have waited for price to return to the fair value gap, right? Then the next thing we do is we place a limit order at either the fair value gap with a stop loss below the sell and a stop loss above if it's for a buy. Either we do that or we place a limit order at the 50% of the fair value gap. So now for this setup, the setup is actually formed in such a way that we will be placing the limit order at the 50% of the fair value gap or of the range. So we draw the fib, and as you can see, this is the 50% or the 0.5% of that fib, and you can see this was that entry of the trade. Then the last thing we do is we target the negative 0.5 level of the fib. As you can see, this is the negative 0.5 level right here of the fib, and if we targeted it, our TP should have been hit somewhere around here. So now that you know the 7 easy steps that we need to trade this strategy and all the characteristics of the trading setup, let's get right into the charts where we are going to look for these trading setups. On the chart right now, I'm on NASDAQ on the 15-minute time frame, and I want to start going through all the 7 steps. So the first step that we had earlier said is we draw our range, right? And our range is going to be from 8:30 to 11 New York Standard Time. After demarcating our range, as we said, we are going to look for any swing high or swing low which we'll be expecting price to trade above. And as you can see, this is before 8:30, right? And we just look left. Is there any swing high that we'll be looking forward to price taking out? Yes, there is a swing high right here, which we want to see price taking out this swing high. And also, is there any swing low to the left, which we want price to take out? Yes, there is a swing low right here, and there's also a swing low right here. We are going to demarcate this swing high and the swing low. The swing high is right here. So we just draw it out in time, as you can see what we have done right here. Then we'll also do the same for the swing low right here at the bottom. And after doing this, the next thing we do is we just start waiting for price to actually take out either the swing high or the swing low after a good impulsive move. There you go. As you can see right now, price has actually taken out the swing low. When this happens, we now go to the next step, which says we should drop down to the 1 minute, 3 minute or 5 minute time frames to look for a trading setup. But I'm not going to do that for this one. I have done that in other videos, but I want to also show you that the same setup which we look for on the 1 minute, 3 minute, 5 minute can also form on the 15 minute time frame. And actually these 15 minute time frame setups actually give us the best risk to reward. So let's continue forwarding price on the 15 minute time frame and see if we are going to find that setup that follows all the rules which I have shown you. This looks very interesting. I don't know if you have seen it, but if you have not seen it, I'm going to show it to you. The first thing we are looking for, that is the characteristics of the setup, is an impulsive move, right? And have you seen an impulsive move? Yes, we have seen an impulsive move that has a fair value gap. That was the first characteristic that we wanted to see. This is the first fair value gap of that impulsive move which has happened. Then the next thing we want to see is this impulsive move greater than 25 points? Yes, let's check it out. And as you can see, the impulsive move is actually greater than 25 points. It's actually 55 points. The next thing we want to see, has this impulsive move formed at least 2 opposite candles before the impulsive move? Yes, it has done so. You can see there are at least 2 bullish candles before the bearish impulsive move. And the last thing, has this impulsive move taken out a swing low or a swing high? And since it's a bearish impulsive move or it's a bearish setup, yes, it has taken out this swing low right here and also this swing low down here. With that said, the next thing we do now is we draw our fib, right, from the high of candle 1 of the fair value gap to the low of candle 3 of that fair value gap. And as you can see, we are putting our interest on the 0.5 level of that fib, or the 50% of the range. And as you can see, it has fallen right here between this fair value gap. Now with this, we are going to be dropping now down to the lower time frames to look for a trading setup. Why do I say this? Because normally, we are going to be placing our entry on the 0.5 level here, place our stop loss at the 1 level right here, and we are going to be placing our take profit at the negative 0.5 level right here. But I'm not going to be doing that, because if I do that, I'm just going to have a trade that is 1:2. But if I drop down to the lower time frames and look for the first fair value gap that has been formed within this higher time frame fair value gap, and if we actually have that, then that is actually going to give us a better risk to reward, which is going to be greater than a 1:2. Right now, we have dropped down to the 5 minute time frame, and just like I said, we are going to be looking for the first fair value gap that has formed within this higher time frame fair value gap, and that is where we are going to be placing our trade. And if you can look closely, you can see that right here, this is the first fair value gap that has been formed within the higher time frame fair value gap. It's very small, but that is what we are going to be looking forward to taking our trade at. And with this, we are going to be placing our entry right here on the low of that fair value gap. Our stop loss is going to be right here on the high of candle 1 of the fair value gap. But we are still going to be taking our profits at the negative 0.5 level of that entire range. Now, I hope you can see that with this, we are actually going to get a higher risk to reward as compared to placing our entry just here, our stop loss right at the top here, and our take profit here. This one actually is going to give us a 1:4 risk to reward, and that is pretty nice. So let's place our trades. Okay, right now, as you can see, we have placed our trades. The next thing we are going to do is just to wait to see how price is going to play out. And right there, our TP got hit. You can see we got our entry right here. Our stop loss was at the top here, and price took actually 18 hours to hit our take profit because, of course, the setup formed on a higher time frame, so it has to take a longer time to get to our take profit. This is a trade that I actually took myself, and I'll show you the screenshot right now to prove that this was a trade that I took, and I sat through all of these 18 hours because of the confidence that I have in this trading strategy, and I wanted to share it with you guys right now. So normally, whenever I place my trade right here and price gets below this zone, I normally always place my stop loss to break even, but I never did that here. And also, there's something very interesting that I want to show you guys. You see that our take profit was at a negative 0.5 level of the zone, right? And that was right down here. But let's just forward price a little bit to see what price is going to do after that, because it's very interesting to realize that the negative 0.5 level, let's go back to the 15-minute, the negative 0.5 level is somehow very perfect in such a way that after price hits our negative 0.5 level, there's always a tendency that price is always going to turn around. Just look at it. This is a negative 0.5 level, right? We placed our trade, right? You can see this was a 0.5 level right here. Our entry was here, then our take profit was here. But you see, price has turned all the way after hitting a negative 0.5. That just to show you how precise our take profit level is, because it's just stagnant. We are not going to change it. We are not looking for any swing highs or swing lows to take our profit at. But at the negative 0.5 level, that is where we are going to take our profits. No matter if it's giving us a 1:2 or 1:3 or whatsoever, we are going to take our profits only there. Now, after showing you this on just a particular setup that I took within the week that helped me to win my Forex Fund evaluation phase 1, I know you might still not have enough confidence to trade this strategy. If you want to see me backtesting this trading strategy for an entire week and see how it turned out, then click the video right now on the screen. With that said, always remember, no trade is always better than a lost trade. Catch you guys in the next one.